Stock Market for Beginners. Hello, and welcome. Here on the channel, our mission is to transform lives, one step at a time, with practical information and strategies that truly work. Today, we're diving into the fascinating world of the stock market, uncovering how you, as a beginner, can take your first steps into this promising and opportunity-filled environment. Before we begin, I'd like to ask you to like this video, subscribe to the channel, turn on the notification bell, and leave a comment below. This helps us bring transformative content like this to more people. Grab a pen and paper because what we're sharing today could completely change how you view investments. Remember, all the important links, tools, and additional materials will be in the description and pinned in the first comment. And there's more. At the end of the video, I'll propose a transformative task that you can immediately implement to kickstart your journey into the stock market with confidence and security. Now let's get straight to the point. What this video is about and what it is not about. What this video is about: how to start in the stock market without complications. Defining the key concepts every beginner investor needs to know. Essential tools and platforms to get started. Practical strategies to avoid common mistakes. Building a solid foundation for financial success in the stock market. What this video is not about. Magic formulas for making money quickly or easily. Promises of instant wealth. Overly complex approaches that intimidate beginners. Technical jargon without practical explanations. Shallow content with no actionable guidance. Get ready, because what you're about to learn today will not only open doors to the stock market but also provide you with tools to build a safer and more prosperous financial life. Shall we begin? Investing in the stock market might seem complicated for beginners, but it's actually more accessible than you think. Have you ever imagined making your money work for you instead of you working for it? That's the opportunity the stock market provides. In today's video, we'll demystify the concepts and present a practical step-by-step guide to get started. Whether you've never invested before or you're just curious, you're in the right place to learn in a clear and straightforward way. Grab your pen and paper, and get ready because today, you'll take the first step toward a new financial reality. What is the stock market? 1.1. Simple definition. The stock market is where investors buy and sell shares of publicly listed companies. Essentially, when you buy a stock, you're purchasing a small ownership stake in a company, becoming a shareholder. 1.2. Why invest in the stock market? Investing in the stock market allows your money to grow over time. Successful companies share their profits with shareholders through dividends, and stocks can increase in value, building your wealth. 1.3. Practical examples. Let's say you bought a tech company's stock for $10. A few years later, the company grows, and the stock's value rises to $50. Additionally, you may receive dividends regularly. This illustrates how the stock market can be a powerful tool for wealth creation. 1.4. Common mistakes when starting. Unrealistic expectations. Don't expect to get rich quickly. The market requires patience. Lack of study. Investing without understanding the basics can lead to losses. Following tips without research. Always do your own analysis before investing. Transformative task. Research 3 well-known companies listed on the U.S. Stock Exchange, e.g., Apple, Tesla, Microsoft. Check their stock price history and think about which one you'd invest in and why. How does the stock market work? 2.1. Supply and demand. The stock market operates based on supply and demand. When many people want to buy a stock, its price increases. When more people want to sell, the price decreases. 2.2. Market participants. Individual investors. People like you, buying stocks to grow their wealth. Institutional investors. Large organizations, like banks and pension funds, handling huge volumes. Brokerages. Companies acting as intermediaries, facilitating the buying and selling of stocks. 2.3. Stock exchange. The stock exchange is where stocks are traded. In the U.S., major exchanges include the NYSE and NASDAQ. These platforms ensure security and transparency in transactions. 2.4. Market cycles. The stock market goes through cycles of highs and lows, influenced by economic, political, and behavioral factors. It's crucial to maintain a long-term perspective and not be swayed by daily fluctuations. Transformative task. Research a stock listed on the U.S. stock market and analyze how its price fluctuated over the past week. Note the days with the biggest increases and decreases, and try to identify what caused these changes. Types of stocks and their uses. 3.1. Common stocks. These give shareholders voting rights in company meetings. Owning common stocks allows you to participate in important decisions, such as mergers or leadership changes. 3.2. Preferred stocks. These prioritize dividend payments and reimbursement in case of bankruptcy, but usually don't provide voting rights. They're ideal for those seeking passive income. 3.3. Blue chip stocks versus small cap stocks. Blue chip stocks. Large, established, and stable companies like Apple and Coca-Cola. They're considered safer investments. Small cap stocks. Smaller companies with higher growth potential but also higher risk. 3.4. Growth stocks versus value stocks. Growth stocks. Companies with high growth potential, like startups or tech firms. Value stocks. Companies undervalued in the market but with solid fundamentals, ideal for long-term returns. Transformative task. Pick a type of stock, common, preferred, blue chip, or small cap, and research a company that fits this category. Write down its current price, growth history, and why you would, or wouldn't, invest in it. Step-by-step guide to buying stocks. 4.1. Choose a brokerage. The first step to investing in stocks is opening an account with a brokerage. Pick one that offers competitive fees, a user-friendly platform, and good customer support. 4.2. Deposit money into your brokerage account. Once your account is set up, transfer the amount you plan to invest. This will serve as your investment capital. 4.3. Analyze stocks. Use tools like charts and financial reports to study companies. Understand their growth history, earnings, and future potential. 4.4. Make your first purchase. Access the brokerage's trading platform. Look up the stock by its ticker symbol. Choose the number of shares you want to buy and confirm the transaction. Transformative task. Research a brokerage that suits your needs, open an account, and explore its platform. Simulate a stock purchase to familiarize yourself with the process. Basic strategies for stock market beginners. 5.1. Buy and hold. This strategy involves buying shares of solid companies and holding onto them for a long period, benefiting from appreciation over time. Ideal for beginners who want to avoid market fluctuations. 5.2. Portfolio diversification. Don't put all your eggs in one basket. Invest in various sectors and companies to reduce risks and increase the chances of consistent gains. 5.3. Invest in ETFs. ETFs, exchange-traded funds, allow you to invest in a diversified set of stocks, reducing the need to pick individual stocks. It's a practical and efficient way to start. 5.4. Use the dollar-cost averaging method. Invest a fixed amount regularly, regardless of stock prices. This strategy helps reduce the impact of volatility by buying more shares when prices are low and fewer when prices are high. Transformative task. Choose one of these strategies and develop an initial investment plan based on it. For example, select 3 sectors to diversify or research an ETF to invest in. Common mistakes beginners should avoid in the stock market. 6.1. Investing without a plan. Many beginners enter the market without clear goals or a defined strategy. This often leads to impulsive decisions and unnecessary losses. 6.2. Following trends or hot tip. Avoid investing based on rumors or unsubstantiated recommendations. Research and rely on well-founded analyses, not promises of easy profits. 6.3. Underestimating the importance of diversification. Placing all your capital in one stock or sector can lead to significant losses. Always diversify to protect your portfolio. 6.4. Ignoring fees and costs. Brokerage fees, management costs, and taxes can impact your profits. Before investing, understand the associated costs and find ways to minimize them. Transformative task. List the mistakes presented and reflect. Which one are you most likely to make? Create a preventive plan to avoid this mistake in the future. How to track your investments in the stock market. 7.1. Monitor the performance of your stocks. Use market analysis platforms like B3 for Brazil or other specialized websites to track the performance of the stocks you've invested in. This will help you understand how the market is reacting and whether it's a good time to buy more or sell. 7.2. Read company reports and news. Stay updated on quarterly reports from companies and news from the sectors you invest in. This could signal changes in the company's performance or in the market that may impact your investments. 7.3. Use technical analysis tools. Charting. Technical analysis involves studying price and volume charts to predict future movements of stocks. Tools like TradingView can be very useful for beginners. 7.4. Set profit and loss targets. Stop loss. Set clear profit and loss targets for your stocks. Use stop-loss orders, automatic sell orders, to limit your losses in case of unexpected market movements. Transformative task. Research a stock analysis tool and track the performance of one of your portfolio stocks. Set profit and loss targets for that stock and monitor the results for a week. Starting your journey in the stock market. 8.1. The importance of long-term commitment. Investing in the stock market is not a get-rich-quick scheme. By adopting a disciplined approach and focusing on the long term, you can take advantage of the market's growth potential. Continuous learning and constant review of your strategies are key to success. 8.2. The value of ongoing knowledge. The stock market is always evolving, and staying updated with new strategies, trends, and tools can be the key to improving your performance. Dedicate time to study, seek new knowledge, and grow as an investor. 8.3. Learn from mistakes and experiences. Investing is a continuous learning process. Everyone will make mistakes, but the important thing is to learn from them and not give up. Every mistake is a lesson that brings you closer to success. 8.4. Don't be afraid to start. Remember, the biggest mistake is not starting. If you're just beginning, celebrate that step. Every investment, every stock purchased, is an opportunity for growth and learning. Final transformative task. Commit to investing consistently for at least 6 months. During this period, keep an investment journal and write down what you've learned, the mistakes you've made, and the successes. At the end, review and adjust your strategy to improve your results.